In this video, I will do the technical analysis of S&P 500 index for the week commencing from January 31st, 2022. If you see this, the previous week, the week that commenced from January 24th. So I told you last week, last to last week in the technical analysis for the week commencing from January 24th, I told you that whatever happens in the market, market will rebound. Okay, but yes, there was not as expected, because I was expecting this rebound, okay, to hit this level or particularly this level. But I told you that whatever happens in the market will certainly rebound. Finally, on Friday, if you see this candle, okay, a very heavy bull candle on Friday. Okay, it's a very heavy bull candle, but other than that, the most important part is here. Market was coming down. Okay, for last 2 or 3 weeks, it was coming down. But because this candle has formed, this candle, okay, this bull candle, it has formed here, and most important thing is that it has closed above the 200-day moving average. 200-day moving average. Okay, so that this the 200-day moving average is basically the benchmark for the markets, for the stock. So if a market struggles to move above 2000, above to 200 day moving average, in that case chances are it will come down. Okay, but whenever you see a market is, for some reason, okay, if the market is able to survive and if the market is able to close above 200-day moving average, which means that now there are very good chances that market is going to move up. As usual, so I will do this technical analysis in two parts. First, I will do it on the weekly chart, and then I will do it on the daily chart. So first, I'm going to begin with the weekly chart. Okay, guys, so we are here on the weekly chart. This is the weekly chart. Weekly chart means one candle means 1 week, not 1 day, 1 hour. One candle means 1 week. Okay, so this is what I was telling you. Okay, and this is what I told you last week for the in my technical analysis for the week of January 24th, that whatever happens, it is going to rebound, and there you can clearly see a rebound here. Okay. Now let's do the technical analysis. Okay, so the technical analysis here, fair enough. First comes, sorry, in the technical analysis, first comes the Bollinger Bands. If you see, this is the lower band of the Bollinger Band, this is the median of the Bollinger Band. Market has closed between lower band and the median of the Bollinger Band, which means market is clearly bearish. Then comes the moving averages. These are the moving averages. Still a fan out in the moving averages. No crossover, no nothing, but a fan out. But yes, the other thing is that market on two consecutive time, means for 2 consecutive weeks, has closed below the moving averages, which means yes, now the market is bearish. Okay, but still it has some bullish sentiments because of this fan out in the moving averages. Okay, now comes the Ichimoku. So this is the Ichimoku. So you can clearly see market has closed above the Ichimoku. Market has not even touched the Ichimoku on the weekly chart, which means the market is bullish through Ichimoku. Now we look into some other technical indicators here. If you see the MACD, MACD is heavily bearish. Okay. Other than that, okay, MACD is also saying that now there is very heavy divergence in the price. See, the MACD is moving average convergence divergence. Okay, MACD, moving average convergence divergence, which means the convergence or the divergence in the moving averages or from the moving average. Okay, so you can clearly see that now there is a very heavy divergence, okay, through the moving averages in the price, which means that yes, MACD may try to correct itself. Okay, means in order to limit the divergence, or in order to cover the divergence, because as of now you can see MACD is 61 and the signal is 100. Okay, so almost 40%, this 40 points difference between the MACD and the signal, which means that there is a lot of divergence on the weekly chart. Okay, and this is more than as was seen, okay, in last 2 years, I guess, more than 2 years. Okay, So yes, so we can expect that now through MACD market may try to fill up this gap, and market may try to correct itself in order to cover this the divergence through the MACD. Now comes the stock RSI. Okay, stock RSI is clearly bearish. Okay, clearly bearish. Now the divergence. So now the divergence in the prices. Okay, see the MACD is the divergence through the moving averages. But here the divergence. Okay, divergence in the prices. Okay, it is normal. So this divergence here is normal in the prices. Okay, which means that as of now, divergence is not creating a problem. But the divergence of MACD is, yes, it is creating a problem for the bears and is supporting the bulls. Then comes the momentum. Okay, now momentum is building up. It is almost 55, which means that momentum is now supporting the bears. So this thing is clear that almost through all of the technical indicators except the Ichimoku cloud, okay, market is clearly bearish. Market is clearly bearish, okay, except the Ichimoku cloud. So now let's move on to the daily chart to see where the lower high is expected to form, okay, and when it is expected to form, and when and what you should do as soon as it hits the lower high, and what are the conditions, okay, that the market will come down, or surprisingly, okay, market may also even breach, okay, this is the lower high. So let's move on to the daily chart. Okay guys, so we are here on the daily chart. This is the daily chart. Okay, this is the daily chart. So daily chart means that one candle means one day, not 1 week, 1 hour. One candle means one day. Okay. Now on this daily chart, first let me write down the support and resistances, and then we will do the technical analysis. This is 4740. Okay, and it is very important resistance here. Then we have 4635, 4635. Okay, then we have 4575. Thereafter we have 4527, 4527. Then we have 4460, 4460. Then comes 4425, 4425. Okay. Then we have, this is 4400, 4400. Thereafter we have 4345, 4345. Then we have here, it is 4291 or 4290. Okay, so the importance of this 4290, okay, I have told you many times in last 6 months. So if you see this, okay, let me first cover this part. Then we have 4240, 4240. Thereafter we have this support at 4185, 4185, and then finally at 4035, 4035. But I'm not expecting the market to come down and hit 4035 until and unless there are some exceptional movements in the market. Particularly, see, this week, some other giants are going to post their earnings, including Google, Amazon, Facebook, Merck, and there we have Ford, means the and General Electric. So means there are many giants who are going to post their earnings this week. So again, this week is going to be volatile, you can say. But as of now, these are the support and resistances. Now this 4290, this I have told you here also. Okay, in the month of September, October, I told you 4290. Then here also in the month of July. Okay, I told you about this, the 4290. So this is what I've told you in last 6-7 months again and again about 4290. So 4290 is an important support here in the market. And now let's first do the technical analysis, and thereafter we will see how the market is going to behave or how the market is going to react. Okay guys, so let's do the technical analysis first. uh, First comes the Bollinger Band. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band, which means, and the market is in between lower band and the median of the Bollinger Band, which means the market is bearish. Okay. Then comes the moving averages. Moving averages, clear fan out. This fan out is supporting the bears. Okay. And the market has closed below all of these moving averages, which means the market is clearly bearish. Then comes the Ichimoku. Market has clearly closed below the Ichimoku, which means market is bearish. Now some other technical indicators. This is the MACD. If you see the MACD, again the same concept, moving average convergence divergence. So there is some divergence, okay, and you can see that there was some heavy divergence, and this this difference or this divergence, it helped the market to move up on Friday. Okay, in last 1 hour or 2 hours, okay, market moved up. So because of this heavy divergence, and but still through this pattern, through this MACD, this market is bearish. But yes, because of the divergence, because of this heavy divergence, market is going to cover this divergence first before it further comes down. Then comes the stock RSI. Stock RSI is bearish, but yes, as of now it is trying to move up. So if you see that on Monday, okay, if the market moves up, then the stock RSI will further move. It will further move up. Means the K channel will increase, and the K channel is expected to hit 20, or sorry, not 20, but 30 or 35. And if the market remains bullish or remains around here, okay, for 2 or 3 days, in that case the K channel will be more than 70 or 75, means it will clearly support the bull. But as of now it is supporting the bears, but it is now turning in favor of bulls. Then comes the divergence. So divergence in the price, yes, so that divergence is clearly it is means it is not much, but it is still increasing. Okay, but as of now this divergence in the price is not going to create any problems. Then comes the momentum. Okay, so this is, so there is very heavy momentum that is supporting the bear. You can see clearly 93, 94. Okay, so momentum is clearly supporting the bears, which means that as soon as this market moves up, okay, and if there is not enough bull momentum, in that case the market will come down because of this 94, this momentum here. But if the market moves up heavily, then this momentum it will break, okay, and then it will reduce, and that will support the bulls. Anyways, fine. So through all of the technical indicators, okay, this thing is clear that the market is clearly bearish. Okay, let's see how the market is going to behave, or how the market is going to move in the coming week. So see, market was able to sustain above 4290, okay, as it did couple of times earlier in last 6 or 7 months. So I told you the importance of this 4290, okay, many times again. Then so now, and this then this candle is formed. It is a bull candle, and furthermore this candle closed above the 200-day moving average. Okay, let me write it down. 200-day moving average. So this is something that you do not see every day or every month. Okay, 200-day moving average. Okay, this is the 200-day moving average. So clearly the market has closed above 200-day moving average. Okay, which means yes, there are still some bullish sentiments in the market. Now, because of the closing of this candle above the 200-day moving average, okay, after many months, okay, market is going to shoot up. Okay, now when market moves up, market is expected to hit this 4527, 4527, okay, or 4575. These two are 4575 or 4527. So this market is expected to move up. Okay, it will move up, and then somewhere around here, okay, it will find some resistance because of the moving averages, okay, resistance because of these levels, okay, that I have deduced here. So it will find some heavy resistance. Now if the market fails to clear this resistance, means if the market fails to clear this particular zone, okay, in that case market is going to come down, and this particular zone will create a lower high for the market. Means if market struggles to cross this zone, in that case it will form a lower high and you are supposed to sell, okay, and when you sell, then you will see market is coming down and you will make money, okay. And if for some reason, maybe for some news, okay, or for some other reason, if the market is able to cross this zone, okay, on 2 consecutive days, if you see like two candles, okay, means 2 daily candles above this particular zone, in that case you can expect the market to hit 4740, okay. And but as of now, the chances of hitting 4740 are very thin, but still anything can happen in the market. This is stock market, okay. So this is simple. So this zone, okay, this particular zone 4527 and 4575 is going to play a very important role, okay, in and it will decide the near future of S&P 500 index. So if you see it is, the market is unable to hold and it is struggling, in that case it will come down, for sure it will come down, okay. And if you see that it is for some reason it was able to close above this zone, okay, on 2 consecutive days, then no problem, it will further move up, okay. So guys, this is what is expected to happen, okay, and this is the technical analysis of S&P 500 index, and I have given the link to the Google spreadsheet, that is called spreadsheet, in the description of the video, okay. So you can take a look. So guys, this was my technical analysis for the week commencing from January 31st 2022.